how great are investors feeling about this rally? I mean, a little over a year ago, everyone was calling it the most hated bull market ever. Do you want this chart first, or do you want this one first?
You know, I really like the chart. I know you brought it up earlier, the relative strength index. I really like that chart because I think it just shows the breadth of this rally. Exactly. So I like this one because it is not just U.S. stocks. It's not just developed stocks. This is emerging markets. This is Asia. This is Japan. This is world indexes. The only one, if you're looking at developed nations, that isn't at overbought territory. So again, this is relative strength index. This measures the momentum and speed that these equity indexes are rising. The only one that isn't there is Europe. But if 70 is overbought, which is the level analysts say, Europe's at like 65. So it's really close around the world. Really hard to continue to call this the most hated rally when it keeps going and people keep buying. And the sentiment is there for optimism.
So if so many equity indices are overbought, according to the 14-day RSI, who's actually buying right now?
It's the better question almost is who isn't buying? Everyone. So you look at individual investors, institutional investors, buy side, sell side. So the other chart we were talking about, this one is individual investors. So this is the AAII survey of individual investors. And right now, 60% of individual investors, that chart right there, say that they expect that stocks are going to go up in the next 6 months. Now, that's the highest percentage since 2010. So a lot of optimism in individuals, institutions, they're ditching their short positions.
Is that a contrarian indicator or not?
It definitely can be. So it depends who you ask. Some people say, look, this means it's the end of the bull market because there's so much optimism. Morgan Stanley, for example, has a bit of a more sobering view. They basically say, look, this increases the potential that we get a short-term correction. At some level, it's just simple math. More buyers means more sellers. But you need to have that high built-up optimism, a lot of buyers in the market in order to have a run on the bank. And things have been so calm, there indeed is a potential for a shock, which could really send people running towards the exits. And it would be violent because there's so much optimism and so many people buying.